Hi, welcome to the market alert for Tuesday 11th of April 2017. So yesterday we saw the market moving higher, and as I mentioned in yesterday morning's market alert, they want this market up as much as they can in the short term because they know that it is going to be coming down shortly. Even the sell in May and go away is approaching us too. So we see the market with the buy signal, we see the market go through the buy signal, and then we see prices trading up towards the scalp target, which you can see there. Volume is quite useful in the first bar, but notice it starts to drop off in the second and the third. So as prices are moving higher, I'll just move this along a bit, you can see they start to struggle. And what I'm doing here, I'm just going to let this play out. Because we had a 50-point potential loss on this trade and the market seemed to have run out of steam, plus we've got that resistance in the daily chart which we'll come to shortly, I decided to move the stop up 50% below this bar and thereby reduce the potential loss from 50 points to 14. There's no need to stay back at 50 when you can see that the market is starting to struggle, so you might as well reduce the potential risk. Wouldn't do this normally, except for we've got these three big up bars where we've seen the market, we've got heavy buying there, and then it starts to drop off. So all of the activity is starting to disappear. The power in the engine room, as it were, the loss of acceleration is starting to fade there. So that's what I did for the first thing, and I'm just going to fast forward. The market then eventually broke through the scalp, and what I decided to do was just to leave this trade running and move the stop, which came out at break even. So I left the stop at break even and again gave the market chance to show its hand, and as it starts to move higher I will start to move the stop loss in, which is there. And you can see there, stopped out for 37.5 points, but we've also got this weakness here as well, and again you can see it here. We've got this big spike in the volume again like we had on Friday at the resistance level, or just below it, and then the market moving to the downside there. It does come back a bit and then comes back through, and then eventually we see this. So what happened here? Well, very simply, we've got here South Korea is the issue as far as the news is concerned. Here we've got according to reports, there was China had deployed 150,000 troops to the North Korean border, which is making things slightly adding a bit of tension, as it were, to North Korea and the relationship between the US as well. I noticed that King Yul-jin, whatever his name is, has been out, and he's commented about Trump and what a madman he is. So it's the pot calling the kettle, I suppose. So yeah, so that's the reason why we saw the market do this. And then of course I sent the message out before this happened, and then I said the market was likely to move back. It did for a while, and then it dropped back down again, another bit of a shakeout. But as I said, the market made its way back. I didn't bother with the evening session as the market was quiet and waiting for Yellen. And then there was a sell signal that came in, followed by a buy signal that was activated, but then the market traded sideways. Then it went short, and then it's too close to Yellen talking at the Ford School at 9 p.m. BST there. And then we see prices just trading sideways to lower. So let's see what's happened on the overnight just before we get into the daily charts. It seems to be quiet on the World War III front at the moment. It seems to be brewing up for something out there as you read the news. I may regret saying those words, but it seems like something's afoot with regards to all of this posturing by Korea, and then China, Russia, Syria, the US, who are the world's police force, of course. So it's going to be an interesting time as that one's come onto the onto the scene as well. I've always said watch out for the geopolitical events that we don't really know an awful lot about that's going on behind the scenes. And again, you can get some big swings on the overnight market, obviously because of the eastern problems, and then the Middle East obviously waking up before the US as well. So we've got a fairly quiet night, to be honest with you. I'm surprised it's that quiet, but it is. And then in the daily chart, the usual picture, we've got this resistance across here that's still holding. We've got a bit of support through there that's holding. We're in a range. There's no doubts about that at the moment. We're stuck in this sideways range. Volume off yesterday. Thursday and Friday last week we saw a big spike, which we spoke about in Monday's market alert. News wise, what have we got today? Not had a chance to have a look yet. It's Tuesday, and that's always an interesting day. We got the JOLTS job opening at 3 p.m. and then Kashkari speaks at 6:45. So again, we've got nothing really out. It's Tuesday. Tuesdays can be a sideways day, as I speak about every Tuesday, just to warn you. First hour, and then really don't get an awful lot. On the implied volatility front, we've got an increase in the implied volatility to 1083 from 1017, and that's because of the backdrop of the geopolitical situation with the countries I mentioned earlier. So it's a bit of risk coming into the market there. Certainly an increase, and it's we've not seen these highs since March and sort of the end of March, but going back to the post-Trump victory there, where we're seeing a bit more volatility. So across to that sort of 11.81%, if that's taken out, then we should see a decrease in prices, a drop to the downside there. And finally, more corruption. No surprise to anybody that follows the market alert. We've got this secret recording implicates Bank of England in LIBOR rigging. Well, what a surprise. Call me a cynic, but this has been the picture for the last 8 years, 9 years now. And you know, it's interesting how they leave these things for so long so nobody can really be prosecuted or have their hands slapped. But these things do get revealed eventually. At the time, I was told I was a conspiracy theorist, but the banks are corrupt to the core. Make no bones about that. You'd have to be a fool to believe they were honourable or anything other than the corrupt institutions that they have become, certainly at the top level, the Federal Reserve, all central banks, frankly. And also, yesterday, let me see if I can find this for you as well. So here we go. In the first week of ECB taper, that means to reduce the QE of the bond buying program, Draghi, a good old Super Mario, has increased his corporate bond buying back program from 75 billion to 77 billion. Oh, that's probably million actually. 2.4 trillion. Oh no, 2.4 trillion. Sorry, billion increase. So yeah, the madness continues. 482 million per day, and roughly a 40% increase from the recent run rates. So even though Draghi last week spoke of tapering the bond and money printing program that they've got going on in the Eurozone at 60 billion a month, it appears that he's exceeded those limits by buying up corporate debt. And then people say to me that everything is fine in Europe. The problem with Europe is it's going to fall apart because of the debt situation. 9 trillion and growing, and 60 billion a month being printed to hold the whole scam together. So yeah, it's an illusion. Never mind the political side of things. This is what you want to watch, is the actual behind the scenes financial issues that the Eurozone has, and the mounting debt and corruption also. Anyway, on that cheery note, that will do for today. I will see you in tomorrow's reporting later today, but like I say, it's Tuesday, and you can generally expect not too much after the first hour, because most of the weekend news is filtered into the market during the Monday trading session. Right, that's it. Thanks for watching. See you in the next one.